Hello traders, you're welcome to this video. In this video, we are going to be discussing an XAUUSD scalping strategy. So if you are a scalper, then you might want to watch till the end because we are going to be discussing different things that can help you in scalping the XAUUSD pair successfully. So first of all, we're going to be looking at the time frames that are most suitable for scalping gold. And these time frames are basically the 1 minute time frame and the 5 minute time frame. For scalping, the 1 minute or 5 minute chart works best. These time frames allow you to catch quick price movements and make faster trading decisions. So now we're also going to be looking at the key indicators that are used for scalping XAUUSD. And the first indicator on our list is the exponential moving average. So for the exponential moving average, we are going to be using the 50 period EMA, okay, for scalping gold. Yeah, you can use the 50 EMA to gauge the overall trend, and then the 9 EMA for quick entries. So we are also going to add on the 9 EMA. I'm just going to change the color here. Okay, the 9 EMA is what we're going to use for our entries. The 50 EMA basically is giving us the overall trend. Okay, so now how do you use the EMA to scalp? So in a bullish market, for example, when the price is above the 50 EMA, basically it shows that it is a bullish market. Then you have to wait for the price to pull back to the 9 EMA. For example, now that we see that price rose above the 50 EMA, then what we will do is just wait for a pullback to the 9 EMA. In this case, it actually retouched the 50 EMA and then came up and then bounced on the 9 EMA. So we would have considered entering a buy somewhere around here. Okay, would have considered entering a buy somewhere around here. But now, because this scalping strategy aims at being as effective as possible, we are going to be using not only the MA, but we are also going to be using two other indicators combined together to both determine and confirm our entry and our exit. So the next key indicator on our list is the stochastic oscillator. So we're going to add on the stochastic oscillator to our chart. And the settings we're going to use is 14, 3, and 3. Okay, 14, 3, and 3. We're going to add it to our chart. And then we're also going to be using support and resistance levels. Okay, just going to mark support and resistance levels. We're going to be needing that too for a more effective trading strategy. Okay, for more effective trading strategy, we're going to be needing that too. So basically, any notable place that you find support and resistance levels, you just mark it for future reference, right? For future reference. Okay, so now in a bullish market, first of all, you make sure that price is above the 50 EMA. That's what we are going to use to determine the trend. So now that price is above the 50 EMA, we know that this is a bullish market. Okay, then what you now do is to wait for price to pull back to the 9 EMA, and then when the stochastic oscillator moves from the oversold, when the stochastic oscillator moves from the oversold, that is below 20, to cross upward, we can see that that happened around here. It moved from the 20, it crossed upward, there was a bullish crossover, and the price stays above the 50 EMA. The price has to be above the 50 EMA. This signals a potential buy entry. Then you can enter when you see a bullish candlestick pattern form near the 9 EMA. So for example, now this is the 9 EMA here, right? And then we see a bullish engulfing. This is a bullish candlestick pattern form here. So after this formation, we can enter a buy and then we can set our stop loss below that candlestick pattern, and then our take profit can be at the next resistance level, or our take profit can be at the nearby the nearby resistance level, or it can be when we have a crossover from the moving averages, or you can also use when the stochastics begin uh, to come down from the overbought level, just additional confirmations. Okay, so for the entry, just know that the price has to be above the 50 EMA, the stochastics have to be from the overbought, from the oversold, pointing upwards, and then you should have a bullish candlestick pattern form. So this would have been a perfect opportunity to enter a buy, and then our stop loss would have been right below the candlestick pattern, and then take profit would have been probably around here or the next resistance level, and we would have made about 50 something pips if we had put our take profit around here. Then if we had used the next resistance level, it would have given us somewhere around 100 pips. Okay, so even if we had used the first resistance level, 50 something pips is still a good catch. Okay, so now in a bearish market, because this is for a bullish market, right? So in a bearish market, price has to be below the 50 EMA. That should be your first condition. Yeah, the first condition is for the price to be below the 50 EMA, and then you have to wait for price to pull back to the 9 EMA. So when price pulls back to the 9 EMA, we can see like somewhere around here, price pulled back to the 9 EMA. Okay, then the stochastics has to be in the overbought area that is above 80. So in this situation, we would have stayed out because the stochastics did not give us the confirmation. So let us look for another opportunity, right? Okay, this is a good opportunity. We can say that price came below the 50 EMA, and then we can see that there was a retest somehow of the 9 EMA, and about that point where this candlestick formed, about that point we can see a bearish crossover from the overbought with the stochastic oscillators. So that would have been a good opportunity to enter a sell, because we already even had a bearish candlestick pattern, and another bearish candlestick pattern even formed around here. We can see this gravestone doji forming around here. So we would have entered a sell either around here or even around here, and then our stop loss could have been right above, for a tight stop loss, right above that bearish candlestick pattern, and for our take profit could be at the nearest support level, which is this. Okay, we can be using our support and resistance levels basically to exit our trades, so that we won't wait for the indicators to give us an opposite signal, because you know that indicators are lagging. Yeah, they are lagging. This is a scalping strategy on gold. So for this particular strategy, you can just be focusing on the support and resistance levels to exit our trade, because we want to catch as many trades as possible, as many good trades as possible. Also, you can also consider trailing your stop loss. For example, if price is going your direction continuously, you can be trailing your stop loss gradually. Remember that gold is a very volatile pair. XAUUSD, to be precise, is a volatile pair. So you might want to consider trailing your stop loss. And then observe good risk management. One, stop loss. Always place a stop loss below the recent swing low. Very important for a buy trade. When you enter a buy trade, the recent swing low can be used as your stop loss level, or below the candlestick pattern, the bullish candlestick pattern that formed. That can be a good opportunity or good place to set your stop loss. And then ensure that your risk per trade does not exceed 1 to 2% of your account. We're talking about risk management here now. So make sure that you don't risk more than 2% of your account per trade. And then in terms of position sizing, you might want to adjust your lot size based on your stop loss distance. Okay, based on your stop loss distance, you might want to adjust your lot size to maintain consistent risk across your trade. So you don't have to use one fixed lot size for any trade you want to enter. You have to do some calculations to know what lot size you would use depending on the distance between your entry point and your stop loss point. Okay, so basically that is how this strategy works. So by following these steps and being consistent, you can develop a solid XAUUSD scalping strategy, capitalizing on short-term moves while managing risk effectively. I really hope that you found this video insightful. Kindly like, subscribe, and click the notification bell so you don't miss out on more trading videos. Okay, cheers and happy trading.